Today is Thursday, December 1st, National Pie Day, National Apple Day as well. Which one are you going to celebrate? Let's take a look at oil. We wrote this up yesterday in Barron's. It's going to show some of the lines that I was looking at. This is the USO. You can see there is no breakout yet from this pattern. It's doing well, obviously having a good week. And let's put some averages in there. Let's put the 50-day in there. So it's definitely doing better. Definitely looks like things could get pretty good. And if we look at this on a weekly basis, we may have to switch to the actual futures for this. I think we will. This is what I had in Barron's yesterday. You could see there is an inverted head and shoulders here with a double right shoulder. But look at where the 50-day is. I'm sorry, this is the 50-week. I have to change that to the 40-week. So bear with me while I edit that. And apologize for not having this set up in advance. And there you go. It's the same story. Whereas it was providing resistance, now it's providing support. So everything looks pretty good here. Momentum, not really caught up yet on the weekly format. But on the daily, it looks pretty decent. But I still have to wait for that breakout above 52 for crude oil itself. Let's go back to the daily. Let's look at some stocks. The energy ETF. And it's a similar sort of pattern here. We do have a breakout though in stocks. Just let me get that in there. You do have the breakout in stocks. You have this little wiggle here before the OPEC meeting, then the meeting, and then away it goes, continues higher. Momentum looks pretty good here. On balance volume, not great. Certainly better than not than going down. And you do have a rising trend line. You can put that in any way you want to draw it. You know, it's probably not the greatest of actual trend lines. So let's make it more meaningful. And there you go. Look at this in the weekly format, and it's the same story. You can see the shape is there, the breakout is there. Former trend line obviously broken to the upside quite a while ago. So this looks pretty decent. Well, let's dive a little deeper. Just looking at some of the other ways to measure energy. The XOP, oil and gas exploration and production, same sort of thing. And the oil services, which is the drillers and producers and all that kind of stuff, looks just as good. All right, unfortunately, unbalanced volume hasn't really come back in here yet. But look at that volume on yesterday's breakout. All right, let's take a look at a couple other things that relate to this. One of my favorite stocks, may want to wait for a pullback on this. It's Hess. I think the domestics look a little bit better than the internationals right now. I would like to see a little pullback on this, but it looks pretty good. Unbalanced volume decent, momentum decent. Not the greatest, but it's decent. So that's one of my favorites on the pullback. And one more thing I want to look at. This is the ratio of junk bonds to high-grade corporate bonds. And why are we looking at this? And what's the point of looking at the bond market when we're talking about energy? And I want to remove this average here. This is the ratio of junk to high grade. In other words, risk off, risk flat, risk maybe a little higher, than away it goes. Risk loving. So that's a good thing. But that's, again, what does it have to do with the energy market? And the point to make is that a good chunk of the junk bond market is energy related companies. So the fact that junk bonds doing much better than non-junk bonds, no matter what interest rates in general are doing, that should give us a little another clue that energy is here to stay. Again, anything goes with OPEC. They could renege on the deal as they've done many times in the past. But I think that we've already seen, here's the XLE again. We've already seen the breakout. We've had a rising bottoms here. Resistance, you know, things are looking much better here. We looked at the moving average earlier. So I think this thing was ready to go, and the OPEC meeting was the excuse for it to break out rather than the reason it broke out. So there you have it. That's it, and we'll see you next time.